Directors' loans and how to use them to save tax. Directors' loan accounts reflects the amount of money that the company owes to you, unless it's overdrawn, and then it reflects the amount of money that you owe to the company. If the company owes you money, then it can be used as part of your strategy to minimise your tax liabilities. You should resist the urge to get the company to pay back this money just because it owes it to you. As you will see, this can be used to your advantage in better ways. If your company is struggling, however, then it is better to try and get the money owed to you paid back. Although you need to be careful about fraudulently preferring yourself as a creditor to the detriment of other creditors. In such a situation, you are well advised to seek the advice of an authorised insolvency practitioner. In our video called "How much dividend should you take from your company?", we explained that the dividends taken up to the limit of your basic rate band took advantage of lower rates of dividend tax. Once you exceed the basic rate band, you will pay significantly higher rates of dividend tax. These higher rates of dividend tax should be avoided if you have the opportunity to do so. The existence of money owed to you on your director's loan account gives you an opportunity to do this. If you want more money than what your basic rate band affords you, then take the excess as withdrawals from your director's loan account. We would recommend that you always take the basic rate dividends first before calling upon the funds in your loan account, as the availability of dividends at the cheaper rates are on a use it or lose it basis. Any unused part of your basic rate band cannot be carried forward. On the other hand, the amounts in your director's loan account are limited, and if you use these first, may soon run out. Used in this way, your loan account can be looked upon as a rainy day fund, to be used on the occasions when you want more out of the company than you can take within your lower rate band. Because of its strategic nature, it is very important that you have a good awareness of just what amount of money the company owes you at any particular time. The reason for this is to prevent you from going overdrawn. Should you go overdrawn, this has adverse tax consequences. Firstly, if any overdrawn loan account is not made good within 9 months of the company's accounting date, then additional tax at a rate of 32.5% will be payable on the overdrawn amount, in addition to the corporation tax that you will pay. Further, if the overdrawn amount exceeds £10,000 at any time in a tax year, then this compels you to have to compute the beneficial interest and report this on a Form P11D, resulting in personal tax and Class 1A national insurance being payable. At DEB, we strongly advise clients to avoid going overdrawn on their loan accounts, though in some instances, tactical reasons may arise to deliberately overdraw and accept the additional tax charges. This, however, needs to be done with extreme caution, as it can strip you of the protection of limited liability if you lose control of the company, for example in a liquidation. Where you have substantial funds on a loan account, you can consider paying interest to yourself. There is a requirement to deduct basic rate tax at source and remit this to HMRC. However, the amount of interest paid is tax deductible by the company, and to the extent it is covered by your personal savings allowance, will be tax-free in your hands. The existence of a positive balance on your director's loan account can prove extremely useful in your strategy for extracting money from your company and could play a significant part in it. Your strategy will need to change each year as allowances, tax rates, tax bands and personal circumstances and preferences change. For this reason, your strategy needs to always be subject to review. If you would like to discuss your own position to ascertain the best strategy for you to extract money from your company tax efficiently, please call us for a free, no obligation meeting on 01226 245824. It will be great to meet you.